Hello everyone, this is Mr. Deep. So today we will talk about some quotes of the great Warren Buffett. That is, be simply attempt to be fearful when others are greedy and to be greedy when others are fearful. So today's in gold market, there is a clear example of this quote. When everybody is greedy, you should be fearful, and when everybody is fearful, you should be greedy. So today in gold, why I'm talking about this? Because the non-farm payroll numbers are released today. So this is like fundamentals of the forex market. Or so fundamentals data are responsible to move the market for the long term and short term both. So first we will try to see what data release. So here is the data. NFP actual consensus and division is negative. NFP revision is negative. Unemployment rate is negative. Labor force participation is neutral. Average hourly earning is negative. So you are saying here that every data is negative or neutral here. Okay. So every data is negative. So when data is negative, the classic response from the market should be downside. Okay. So but what they did here, now look, this was the this was the time 18 o'clock from my time, India's, when data released. So just look back what they did here. This from the 11:30. So if we go for the measure of this whole consolidation range, so this is the range. Okay, and now I will try to project the projection of this range. That would be the projection is here, okay, in this range. It means market makers will move the market to that point if they break this range, okay. Now I was saying this, and when I see, I was not sure about what they are going to do because the NFP numbers nobody knows. Actually, non-farm payroll forecast is release of unemployment numbers and others data to make a change in their interest policy. If employment number is good, they decrease the interest rate. If employment number is bad, they increase the interest rate. So now the projection of this consolidation area, you can see that price break here downside. So it is a symbol that price try to accept the lower values. Okay. And from the 15, there was a very good sell side entry. You can see. So now see the price was here in this range. And now when data release at 6 o'clock, price straight jump to the almost 56 to 78. Okay. And when I look back into the NFP numbers here when data release and I see the numbers, so the numbers are negative. Numbers are negative. Okay. So the classic response of the market should be downside. But when numbers are negative, why market they pushes the market like this? So they wants to create a liquidity or grab the liquidity. So if we try to look at the bigger picture here, so there was uh, there was a liquidity zone. Okay, so now see in lower time frame, we need some adjustment. Okay, so this is like 1 hour time frame. So this is the correct liquidity zone. Okay, yes, or yeah, this is okay. So now that was a trade of mine. I took the place trade here. So let's see. Let's gain $100. Okay. So what I was saying, when number is negative, why market push up? They push up the market for the liquidity. Of whom? First, these sellers liquidity and other liquidity of bigger time frame. So when they move market like this, everybody will who don't see the data, they will think that market will shoot up, and then they brought down to the normal, and then they did actually what it should be done with the market, because when an FP data is negative, why market should go up? It should always go down. So how we can see this going to happen? So now go to the lower time frame. So in lower time frame, you see that sellers are coming through here. Sellers are here, and then buyers came. So now your job is to compare the buyer's candle size and seller's candle size. Now see the buyer's candle size, first low, then fast move to the liquidity, then grabbing the liquidity here again. So if we look at the data here, the sellers are looking more stronger compared to the buyers. Okay. So sellers are stronger compared to buyers. What we can do that we can look into the liquidity levels here. So we see that when market makers move the market fast here after slow up move, and then again the strong sellers came. So there the sellers just break the structure here. Sellers break the structures here. So this was the warning sign that market will go down from the from these sellers liquidity or from these highs. Okay. Now when everything was set up like this, they just shoot down the market to more than 76 to 2413, and that was almost more than $50 move. So that was really good setup made by market makers. They first pushed the market to the upside for the liquidity and fool the buyers. Then again put down back to fool the sellers. Then again put up. So how we can recognize it? Because this side there was no buying or selling recognition here. So what they did, they absorb all the buying in this process. All the buying are absorbed, and now then they release in the down form. Now, how I can enter here? So what I did, I simply took the measured move of this consolidation. Now see the 200 point watch set to my reversal point. The order is showing little bit up because the spread. Otherwise, I put it exactly on this with the smallest of loss. Okay, guys, thank you. I again saying the slow buyers, and there must be some sellers, sellers. Okay, sellers are coming here. This is not good to hold the position. Yeah, I should take this. So the first sign, as you can see, the buyers are not strong enough, but the first sign of the selling is here. This is first sign of the selling. So how they move down the market, they put the liquidity in this place. So that is the selling liquidity. That's why I put my orders widget here. Let me see if they give me, or I will go for break even. Or I think I should partially close off. Hmm. Okay, so okay, now one more event in the market of Nifty. The same thing they did with the election results. So the election result was on the 4 June. Okay, that's 4 June is 4 June. Yeah. So this was 3rd June, and then this was the 4th June. The result announcement date. So you can easily see that if they want to move the market to the downward, first they move the market to the upside for the 1 day before for the liquidity. And how we can recognize that they are doing this? By seeing that okay, liquidity was here, so they push the market for the liquidity, and then what we need to see that slow buying and strong selling. So if you can see that the slow. Buyers are slow here. Okay, and then they open the market gap down, and then it goes like this, almost 2000 points down. Even though when the election result was not clear till 12 o'clock, when it clears, so the sentiments are again goes positive and the market goes up. Okay, guys, thank you. Nifty is a pure shit. It's not tradable. You can see they open the market at 950 with this, and then in whole days they range it. So you can never make a profit out of it. Range it, range it. This is just a bad market. I don't know.